Hey, hello everyone, and welcome to this week's Macro Cafe. My name is Chris. I run Elliott Wave Cafe. Welcome. It is Saturday. Let's take a look at the charts. I think we've gotten a lot of answers as this week kind of came to a close. We had a pretty strong move up here as we're beginning the month of June. Massive breakouts kind of happening, and rallies for that matter on Friday, starting to kind of give us a bit more of a clearer picture of where we are. I've done a video on Wednesday, I think, where we discussed a little bit some of the bearish outlooks in here in the markets, but I think they are starting to slowly get dismantled. This was just a little bit of a perspective. If anyone is still bearish out there, how could this unfold to the downside? But I think, now that we are back above 61.8 in here, I think the risks are increasing that we were going to continue to go higher instead of pushing lower. So the bears arguments are slowly starting to kind of get taken out. We've been bullish in this market since January, and we continue to have our positioning and continue to try to trade with the trend through some aggressive positioning in here. So just a quick look here at the count. I think that this one, it's not going to work out. It's going to take quite a bit of push back from the bears or some kind of a news event or something stronger to take this market down. You notice we've had a lot of participation and a little bit more of a wide move across all the sectors on Friday that are kind of telling us that this market is about to rip higher and continue to push. So, our main counts in the S&P 500 here remain that this was a low in October with the 1-2, and we are in the middle of this larger, let's say, minor wave 3 that just kind of got started. The next attack is going to be on this B wave highs from the summer of 2022 at 43.25, and once we clear the zone, we should continue to move back towards 45, 46, and eventually towards 5,000, maybe later on this year or next year. So back to kind of the looks of the charts in here. Let me go right here and I'll show you. Basically, the S&P 500 is threatening again to break those August highs. A couple of decent hammers of the 10-week moving average, right? Just a nice build up in the trend, threatening to break this resistance. Once we clear this up, we're probably going to come back, retest it a little bit, and then continue to push. Here is how it looks on the OEX. This is, the S&P 100 index, larger caps in here continue to move. And listen, guys, we're saying that, well, we have no market participation. The breadth is weak. But I mean, look at this. It's starting to, start to come back in here from the lows, right? We were negative, and instead of these markets pulling the Qs and the SPYs lower, the larger caps in here, and especially the tech sector, it's starting to lift these markets out of these lows. So, I think that's an important development. I don't think it's a head fake, and we should, I think, respect that and continue to look upwards. You cannot really dismiss such a strong move into the tech sector. Fed is not going to raise rates on June. They're going to pause. They might raise later on this year, depending on kind of how things look. But I think this is a pretty good sign of a green light to move forward on on stocks. Our positioning, I mean, if you look at our portfolio, this changes on a weekly basis, but we've been very aggressive, for the past few weeks in here with our positioning on mid-cap growth, robotics, quality, S&P 500, triple leverage on the Russell as well, equal weight on the tech, cybersecurity, growth. So everything in here that we've positioned ourselves for is for this type of a moves. Also, I want to show you our performance in the month of May. Basically, again, with the aggressive positioning with the market, with the bullish outlook, we were able to enjoy some decent moves in some of these markets, especially on the semiconductors. I mean, a big part of this was just, we've done this trade twice already by taking partial profits, raising stops, and we milked this as much as possible with as much as almost 47% in the last piece that we've had on that SOXL. Then we had some triple Q, some Ethereum, SoFi, Zoom, so there's decent stuff in here, and it's been a pretty good, month of May. We're continuing to stay positioned bullish, for the month of June as well. So that's kind of where we are. And if if you look at the charts, I mean, look at this. Even here, some of these markets were pushing lower, but it looks like we had some fake breakdowns to the downside in here. And if these fail to materialize, when you get opposite moves, in the other direction, they could become very, very strong, right? So it's kind of tilting, telling the bears, no, we're going to break lower, and you're actually getting back out of here, and you could get a much stronger move in the opposite direction. Already the Wilshire breaks up. You can see New York Stock Exchange in here, starting to kind of get back to the upside. Dow Jones, composite in here as well, starting to move. You can see this is the Russell 3000, right? A big part of the investable stock market in here in the US, 245 right now, breaking higher. You can see the Russell 2000 starting to this had a massive move on Friday as well, and on a lot of volume. And then the value line, the medium price of a stock in the US here, it's still, kind of still low, but it's starting to kind of push back. So I like what I see on the charts. Let's continue to take a look. OEX, again, we talked about this. Look at the volume for the past few weeks. Take a look at the mid caps, finally coming back strongly in here after support held. We just got to clear out those moving averages, and then we can rally higher again on the small caps. Huge moves starting to, be accumulated, right? These lows in here are holding pretty well, and you get a nice hammer in the opposite direction. I would be very worried, if you're bear in here, things could start to look, dangerous to the, for anybody that has more of a bearish outlook. Take a look at the NASDAQ, right? Continues to gap higher, nice moves. Now I do expect a little bit of a rotation back from the NASDAQ into maybe small caps and Dow Jones, and that's how we position, into, our active portfolio there as well. I mean, on Friday we bought, banks, the triple leveraged regional banks, and then we also bought triple leveraged Dow, because I think there's some decent moves probably happening in those markets. A little bit of move away from the tech, back into value, back into small caps, mid caps, and those areas of the market can generate some outsized gains. But still, I mean, look at the volume in here: 1, 2, 3, 4, 5, 6 weeks of nice moves in this market. I mean, you can't really fade that. Then you take a look at the Dow Jones. Very simple 1, 2, 1, 2 in here. Very likely we're going to break about 34,500, and then we're on to the races. Very possible Dow Jones will make new all-time highs by the end of this year. Look at the volume this week as well. So I want to stay positioned on that on the long side. Growth index continues to push. Value index is starting to kind of come back a little bit. Take a look at the Russell, right? I showed you just before on the small cap. A couple of resistance levels that he's got to clear, and once it does, we could be off to the races again on an increasing volume in here. I like that. Bitcoin is still struggling. I am bullish, but it needs to clear out some decent levels here, about 28, maybe 28.5, and then, I think if we clear those, there's a little trend line here that we got to clear on Bitcoin. Something like that. If we get above that, then I think we're going to move above 32.5, and then, eventually towards 45, maybe by the end of the year. Take a look here. The volume here is still very weak, but, you can't really put a lot of confidence into that. I don't know exactly where that comes from its exchanges, but, Ethereum still in a little bit of an uptrend. Volatility is very low in here in cryptos lately, so some of the alts are still weak and not looking too healthy. But between Bitcoin and Ethereum, I'll continue to maintain a bullish outlook on those. There's a big, split, right? Just a divergence between what the Qs are doing and what Bitcoin is doing. Bitcoin doesn't want to rally, while the tech sector and the Qs, are pushing higher in here. And Bitcoin, it's still kind of getting stuck behind. So I don't know exactly what that signal means, but it needs to resolve here sooner rather than later. Either Bitcoin pushes higher, or the tech trade reverses in some way and moves into value, but definitely something's about to happen there. Then TLT doesn't do much. US Treasury yields, not much there. The dollar, it's still, it's still in a downtrend. It had a pretty good move. It retraced about 38%. It did it almost like a double bottom in here, pushed higher. I think overall this is a major top, and we're going to continue to trend lower, which is going to kind of work out through this correction. GSG, not much on the commodities. I'm still kind of negative on that. I mean, if you get a big sell-off in the dollar, commodities will benefit, but this is a big downtrend. So until you're actually cleaning up this moving average, there's no point in being long commodities in any way. Gold, this is the third time it's failing at about 2075. The picture is not that pretty. A lot of rejection candles out of those levels coming back into support. There might be a little bit of fight in here, but I don't really see it creating any sort of damage to the upside. You need a lot of fear for that. And then oil, still holding the 65, I think 65 level for several attempts. That's where you have the 200-week moving average as well. So it's kind of stuck in a range, not much. EFA with a nice rejection of the 30-week, nice kind of a bullish hammer. I would be, you know, this gives me confidence that there's a rally probably coming into these markets outside US, so keep an eye on those as well. I think that looks pretty positive on an increasing volume too. And then volatility, what else you want? It's breaking below 15, close at 1460. If you're getting towards 12.5, that means a pretty nice trending market into the S&P 500. So I'll show you a picture here on the daily time frames. You know, it looks, I mean, nice and clean. You know, even here, let me show you another one that looks maybe a little bit better if I can get it here. I think it's this one. Yep, you know, so you look at the moving averages here, just kind of trending. You have the 20-day EMA, you got your 50, and you got your 150. That's what you want. You want the price to kind of be above those. The accumulation line continues to go higher. The RSI never got below 50, right? That's a trending market. So these are the characteristics of a trend. And I've said on Twitter many times, I said, listen, you just wait until some of these levels get taken out, and then the real trend begins. So, you know, I think it's still early. There's plenty of time to kind of get into this, but you know, that's what these charts are suggesting, that we should continue to explode to the upside, and the dips here will probably get bought into support, moving averages, and whatnot. But I think we got a pretty good signal from the market here that you know, that we should continue to buy this market. All right, guys. So take a look at the link below the video. That's where you can find me. I'm on Substack. You can hit me up on Twitter anytime with any questions, any charts, anything like that. I will talk to you later. Thanks for being here. Bye bye.